The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
And a little slow on the upkeep today. Anyway, what do we have going on? Well, another little gap today. Not a lot of action after the open. We're at 2390 on the S&P cash, which is up 16 points. Volume's 2.4 billion shares on the S&P cash, and a lot of people wanted to get short last week. Now I think this is where you start looking at probably the best parts of and the weakest parts. I don't think you pull the trigger on the actual indexes, but I think there are a lot of places you can start nibbling out here for stocks that should have and sectors that should have fairly decent retracements. We're starting to see some signs of that. I had a lot of stocks show up in my scan last night, and it was a big newsletter today. Anyway, there's some other things that I'm looking out there, and just looks to me like there's going to be a lot of low volume tests, both at highs and lows in very certain sectors today. We'll see how the rest of this goes out. One thing I do not like is that I think the upside is rather muted. One of the things one of the best signs of a high in a market or a stock is when everybody gives up on shorting it. Last fall, everybody, in fact, some of my brethren in technical analysis gave me a hard time for calling a high in Amazon for no other reason than everybody everywhere that I knew was already long Amazon. There was nobody shorting it, which meant that everybody was on one side of the boat. Earnings came out, it tanked. It's, of course, made that back and some more. But I kind of feel the way that a few of those tech stocks acted in the last earnings cycle back in November, where they failed, is kind of what we're seeing now. That is that as many people as I can take are all thinking that we could go higher. No one wants to pull the trigger short. And that's normally where the risk reward, I'm not going to guarantee you the market's going down, but I can tell you the risk reward is almost always, when you get nobody shorting, is a little higher and a surprise with a lot lower. Those black swans like to come in from the winter when everybody's just hanging around and there's no air underneath the wings to catch an air pocket. You just kind of drop real quick and everybody wonders what happened. And am I looking at the end of the world? The answer is no. I'm not saying we're going back to S&P 680 or whatever the low was. I'm just saying that much like we talked about Amazon popping lower, it's just kind of a natural ebb and flow. It's like yelling at the sea because the waves come in and crash and then go back out. It's just the way things work. Anyway, we're at 2390. Volume's fairly good. Very, very small amount of shorting today, which again makes me think that we're probably going to hit maybe some level today or tomorrow that will make me think that the lack of shorts is calling a top. Again, not a lot of signals yet that we've hit that, but we'll get into that today. Anyway, we're going to soldier on and start out with a little bit of history, as we do every day.
And it's all just a little bit of history repeating.
What's going on here? That is on today. In 1990, the crew of the U.S. Space Shuttle Discovery places the Hubble Space Telescope, a long-term space observatory, into low Earth orbit around Earth. Repair mission has to be done 3 years later to fix a problem with the mirror because they didn't want to pay to test it. They were trying to get by on the cheap, and it cost them big. Hubble then began sending back its first breathtaking images of the universe. This added more to science than I'm going to say the previous 20 or 30 years. It did so by hitting it out of the park on figuring out exactly knowing how old the universe is, since light actually is kind of the ultimate time machine. Nothing goes faster than that. We could look back 13.7 billion years. Nearly all galaxies harbor supermassive black holes, not just ours. And the Hubble Space Telescope detected a distant supernova that suggests the universe had only recently begun speeding up. So all kinds of nice stuff. Now, of course, new technology has allowed, and computer technology has allowed the telescopes, especially down in Chile, to be as good or better than Hubble. We'll be launching either late this year or next year the Webb. I think it's the Webb space. Is it the Webb? I think it's the Webb telescope. There's also an infrared one that's going to go out and hide behind us, always on the opposite side, so it can hide in the shadow, look in the infrared. But we're going to have a lot more wonderful space pictures and much better coming out in the near future. But in the days of putting up monster telescopes in space, probably over. It's a lot cheaper to have them on Earth. And even trucking and stuff down to Chile, where they've got the redundant telescopes, is a lot cheaper than having anything in space. And it's easy to go fix it. You just wander up there and fix it. It's all expensive stuff, but adds to our level of knowledge of the world around us. The Yahoo CEO says it's a good thing. Miss Mayer will end up getting $186 million for doing a whole lot of nothing. Congratulations. As I said early on, I think she suffered from the curse of the Sports Illustrated cover. Everybody wanted to laud her as the next coming of Steve Jobs. She was on the front page of every magazine. And trotted out as the woman that could both have a baby and be a CEO. They tried to do everything, and it had nothing to do with that. It had only to do with her ability, and she came up short. But, well, she's going to end up, for her tenure there, somewhere in the neighborhood of $300 million richer. So I will not cry for her, Argentina. But that deal, probably on Monday, gets done, and it'll be a good thing to see Yahoo go off into the sunset with Alibaba. We'll be back in a minute. Or Verizon, actually. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And it is Tuesday, so we know that we've got an extra hour of programming here today with Andy Hecht in the 5 o'clock hour. He'll talk earlier with Tom O'Brien for the next, Tom O'Brien for the next 2 hours. But I'm sure that when Andy talks with Tom, he'll be talking about the lumber issue that we now have with Canada, i.e. the tariffs. And it just gives me a good excuse to play Blame Canada, one of my favorite South Park songs.
Blame Canada! Blame Canada!
With their beady little eyes. I love that song, mostly because I work for Canadians, or did work for Canadians. And I think that came out after I left, so I wasn't able to throw that in their face. But a nice bunch of people. And they live above us. Anyway, we were talking about some signs of weakness in this market already. And started to see it a little bit yesterday. Like I said, last night, I went through for a few hours stocks that I was getting signals on. That generally means that you're within a couple of days, if something drastically doesn't change, when I start getting loads and loads of signals. So I wasn't surprised when a ton of them showed up that I started looking and seeing some of them, like the SMHs. Everybody was calling last week on where to short them, can I short them. I thought that these things had to close below the 3x3 displaced moving average before you got any confirmation that you could pull the trigger on them short. I did agree that volume and energy on the way back up was kind of light. You had some strong volume down. So you got most of the things you got. You weren't going to get a 50% retracement and just call it quits right there. So we gapped up yesterday, but 2.2 million shares was going into almost a 4 million share high in the SMHs. Today, we are breaking out above that 1.4 million shares so far against that 4 million share high. So again, energy a little bit less than the April 13th to this high out here than the leg down from March 31st to that April 13th low. You've had a couple of big ABCs, probably more likely consolidation out here that would take you back to that $76.25 low. So you got $3-4 out here, but of course, you know how strong the tech stocks come off highs. But we're looking at that now. Is it going to hold this high? It may by the end of the day, but this is, as my dad used to say, when you're walking on eggs, don't hop. And hopefully, if you are long any of these semiconductor stocks, one, I think you're probably a little greedy if you're still long them. Don't say that you need to short them, but man, would I have fairly tight stops on these. Anyway, we're going to look at a lot of earnings out today. You can also give me a call at 877-927-6648. That's 877-927-6648. You can post a message in the den, or you can email me, but it's been very quiet out here today. Got an email already from Mike in Texas, a great state. I'm in ZSL, Dust, and DGLD from a great entry point. Where should I sell or place stops? Well, I don't know which one probably is more interesting, DSST. Let's take a look at Dust, which is the 3X bear shares. I think you've got, a big sign of strength today in it. You're going into this big sign of weakness on the 15th. So the easiest money is probably over from the March 15th slam down. You're coming back in. You've got about half of it right here. So that's the easy money off the low. The volume on that day was 14 million shares. Today we've already got 14 million shares. So you're in that. That would suggest that your target is probably the lighter volume day down, which would be about $39 when this gap down. It can meander all the way back up there. Is there anything out here? I mean, this is the one thing that you have to be kind of worried about is the high volume low on April 13th. That also means that you could come back and test this before you go back up higher. The downside to not holding this is you're probably not going to get a better setup in this one ever. You had very, very light volume from the March 9th high back down to that April 13th low. So you did have kind of higher volume when you got there, but it did hold up, and you never really had, this significant energy other than that one day on the 15th, which is just the opposite of the way the gold went, right? So you've got kind of high volume down there. Would it come back and retest it eventually? I think you can. But you're going to have a big sign of strength into that sign of weakness with more volume, which suggests that $39 is where you would look. I wouldn't want this thing coming back any more than $29 now, though. The ETFs, as we found out last week, are loaded and huge. They gained over $1 billion in the last year. And that makes the entrances and exits extremely narrow. And that pretty much means that you want to sit on your hands as much as you can. Like I said, I would not be surprised to see the $39 ticket as where you would want to get out. But yeah, $29, I think that's about as much as a pullback as you want because of that high volume low of April 13th. So good on you, Mike in Texas, for the gold short. Chart looked fairly good other than the high volume low. I would have been waiting again for a retest on lighter volume. But what the hey? You're on the right side of that. And you certainly didn't have the kind of, you've had that kind of light energy back to the low. You just had the one big day that actually was a capitulation day. So you take a look at it. You can be like Mike in Texas and email me at path@tfnn.com. Or, of course, give me a call at 877-927-6648. 888-866-4848. I'm waiting with bated breath for your call. That means I will put a worm on my tongue during the next break. Okay, what else do we have? We were going to go through earnings and news-driven stocks. Alcoa, nice pop back up. This one actually, again, has a high volume low at $30.45. Never really was able to break out the low, and a nice little pop out here today with decent volume. The previous high at 35.09 needed 5 million shares. You already got 8 million shares, so that tells you, I think, everything you need to know about Alcoa. Barrick Gold had some earnings, and it probably more than likely was some additional news, which we'll talk about. But this thing is blown out. It's low. And we'll look see just how far back this thing can go now. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Barrick Gold came out with earnings and kind of a little bit of disappointment there. But I think a lot of times a lot of people, the environmental damage that a mine can do is pretty big. And they had a big problem and probably shutting one of their mines. That's probably a little bit more of the downside that we're seeing in some of these ETFs out there. Thanks for John from Philadelphia in the Den for posting that earlier in the day. AK Steel, another steel manufacturer, little pop out here, and of course a drop. The AK Steel had, I think, an earnings last night. I think so. Anyway, nice open, just almost instantly reversed out here today. Got to 753 and putting some dark cloud at cover. I'm seeing a lot more of these kind of reversal patterns, even off the lows of some of these weaker stocks. AutoNation, we had that stock come out earlier. It got to 54.34. Kind of light on earnings. I think everybody's given this company a pass, mostly because it's already come way off previous highs. You would kind of like this thing to test about 54 bucks again to short it. You may not get that opportunity. It's made a higher volume low. Oop, what happened here? Let's get it better. It made a higher volume low than the November 9th low on April 6th, basically doubling the volume. Energy off this high from January 25th down to the April 6th low also increased by about a third. So you've got energy on the way down in these car companies. We've talked about the subprime auto loan business being in high gear over a year and a half ago. We're starting to see repos a little higher in this sector too. So I don't think that there's anything out here. We've probably seen the high water mark on these big car companies that sell cars. I don't know if the exact same thing's going to happen in the manufacturers, probably, but certainly looks like in the big retail car dealership companies you're in trouble. ATI, nice pop today. Would have liked to seen a little bit more volume. This thing right in this $19, $20 level is seen the gap on the 24th of January come up with 21 million shares, up on about 16 million shares. BHI, this one, opened, went a little higher today, was a little lower. You got higher volume. Kind of tough to figure this one out. The rig count that they come out with each Friday has been going up, and so that's kind of a little positive for them, but at the same time, kind of a negative. Energy off this last April 10th high down to today's low actually increased. I don't see anything that says that this thing is not coming back to this gap up that goes back to the 25th of October that had 10.5 million shares. So if you were thinking about being long crude, I think this 52, 52.50 area on Baker Hughes may be a signal to look elsewhere in the oil patch. Biogen had a earnings this morning, a nice pop up, but not a lot of juice so far. 2.3 million shares compared to the gap down of 3.8 million shares back on the 16th of March. So you gap down, you're back into it. A lot of shorts in this, but again, you don't really see the kind of huge volume out here when they move this up. Makes me think that there are probably a lot of people still sitting on their short positions. We'll watch how the volume comes in by the end of the day. Another individual stock that everybody kept predicting the end of it last year was Caterpillar. A lot of shorts going into earnings on this one. The earnings weren't that great, but the people on the wrong side of the boat were. Nice pop up on this one with 14.6 million shares. And you really want to watch this thing for a close or a open lower and a potential abandoned baby on this one tomorrow. CIT Group. CIT Group. Let's take a look at this one. Little pop higher out here today on news, but I'm not going to say that there's anything out here. You had good volume yesterday. CNC, which is Centene Corporation. This one's back in to this gap up, or gap down, excuse me, going back to the 26th of July of last year. That had 12.2 million shares. First time you got back into it was March 1st with 2.1 million. Today, you've got 1.4 million shares, so maybe you get 2 million shares. Earnings were okay. Again, just think that there's a little bit of a short squeeze. This thing fills the gap at 75 bucks, continues no volume, would be interesting. And of course, some of the industrial companies out here like DuPont, also out with earnings this morning. This one popped the futures fairly decently when the earnings statement came out. Now, again, just like the SMHs, there are a lot of stock, not all of them, but there are a lot of stocks out here coming back up to the previous highs, and volume is falling short. March 28th, you had $82.37 with 6.5 million shares. Today, so far, 2.3 million shares. We're going to be lucky to get half the volume in DuPont on its earnings up against this previous March 28th high. So keep an eye on that. EAT, which is Brinker International, had been kind of coming off the bottom, down today. Volume is not all that exciting, but I think you're looking for a retest of the March 13th low on that at $40.92. It may take a little while to get down there. Ericsson, this one didn't move all that way. It moved a little. Certainly looks, of course, it's an ADR, so it'll bounce around. But it looked to me like the good buy on this one would be around $6, and it's still moving down that way. No real signal either way on that one yet. ESRX, which is Express Scripts out here, certainly, I'm going to say this one probably well worth getting the loser horn today. Blew out with volume. Again, this thing goes back a long ways to find out how much farther this thing can go. I'm going to keep on going back. This is blown through, even back to this gap that goes back to, what is this? The 30th, 2013. And really sets up on a longer-term basis a low at $49.79. That's the November 14th, 2012 low in this. So, again, I think we had a caller, was it yesterday? Or it would have been yesterday because it couldn't have been last week. Was talking about looking at his healthcare stocks. Again, just very tough to see these things not falling out of bed. Indecision is bad. So earnings are bad also. To FCX on the winners side out here today. We'll talk about this when we do come back. Nice little pop. It's given about half of that back. We'll see if there's anything more to it than that. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And, oh boy, just a little movement out here. 2390. We're not doing anything. Volume kind of rolling in a little bit better than it has earlier in the day than in past days, where it all just kind of comes at the end of the day. But the S&P just kind of chunking along, so nothing that exciting so far yet. We'll see again. But, yeah, end of the day, you know, is much right now, the last 15, 20 minutes of the day really are telling the story, not the intraday trading. You get a little bit of movement in the open, but it's all about the close these days. Anyway, Freeport McMoran, nice kind of move higher earlier in the day. Looked like it was going to buck the trend. And, you know, I'm sure this is on in some ETFs as those continue to sell. You probably got a little crossfire even on the decent news out of them today. Didn't really do anything other than challenge this candle from the 12th. So I'm not going to say that there's any big signal out here. But again, you're kind of looking at about the 1191 as a decision point. If it can get back down there on light volume with this decent news, you might want to take a look at it again there. Fitbit, the company that continues to Fifth Third, excuse me, go higher. We talked about the trying to look at these signals out here that show when you should get short these stocks, and kind of bouncing around. But again, any of these financials start tailing off over the next few days, I would be very worried about them. Fifth Third would be one of them. This thing can't hold around $25. The next move down is going to be to 22, and I don't think it's going to take much time to get there. GLW, which is Corning Incorporated, thought this company may have had a problem and maybe even gone out of business at one point. It had a lot of troubles, a lot of competitors. They've got everything pretty much going on all cylinders, supplying, of course, the more expensive phones like the Samsung 8 and the next version of the Apple iPhone's glass. And that's probably going to be everything that you need to know about it. Again, not that much juice. Last real big day out here was the 24th of January with 21.3 million shares. And we got about 10 million shares today. So higher, yeah. Is it a short? Probably not, with Apple coming out with a new phone this year sometime. JetBlue also out with earnings earlier this morning. It's just now up to and challenging back to its January 11th high at 23.15 that had 11 million shares. You got the juice today, 9 million shares. You do not have the price, so you're probably going to, this got way up into that candle and that range with the volume, but had the volume, does not have the price. KO, Coca-Cola. Earnings out on this one. Can't say this thing had any big surprises. It's just kind of moving around in its range it's been around. Eli Lilly, this one opened a little lower and continued selling off throughout the day. Let's take a quick look at the IBB. Really, I think on today's news, we should have seen $300 in the biotech index. Got to 296.97. Maybe we get one more gap up. I suspect that if you are looking at this as a possible short, that $300 level has been resistance in the IBB before. In the defense sector, Lockheed Martin, once again, looking like it wants to get back down around this 245 level. This went sideways for a number of days. Last couple of days into earnings, they ramped it. Wasn't a lot of juice. Today, you do have a lot of dark cloud cover taking the trading back pretty much to mid-February out here, to putting people into losing positions. My look at this is that, this 245 level, and maybe even 243 is way standing out as the area that you would want this to come back to. I wouldn't short it, but I would think that is the next buy on that one. A lot of people discussing McDonald's today. A lot of hate for McDonald's, mostly because of their food. We deal in stocks here. You don't have to eat there. Other people can eat there. I eat there occasionally. But what can you say? Nice earnings call. Everything moving on all cylinders. Since they decided to offer breakfast all day long to people that probably don't get out of bed till noon, this thing is done fairly well. And I don't know what else you can say. Nice move, decent sign of strength, and we'll see how that moves in the next few days. McDermott International, not a lot of movement in that one. 3M came out with earnings. They are up a little higher. You would have liked to seen a bigger bounce and some more volume. You're really kind of looking at 1.5 million shares to break out. You got 2.7 million yesterday. You got 3.1 million shares today. So you have the volume, but this one just seems to be kind of gasping for higher prices and not a lot of buyers and probably a handful of shorts. It just doesn't look like there's much in that one in the way of more movement higher. Novartis, now this one, if you're looking at stocks that could roll over in the IBB or in the biotech sector, this was very close. About $77 on this one would have me thinking that you are going back into this big gap day down of March 1st with a 2.7 million shares. Okay. Yeah, Gorilla Glasses, GLW. Pulte Homes. This one also gets the losing horn. But I've seen many stocks in this building sector that look very toppy out here. Now, this one came down with some decent juice today. We'll see how this one comes about, but certainly looks like 2050. What was it? I want to say it was Ellie Mae. Is that what it was? I think so. A few of these other stocks in this housing sector, wouldn't jump on them now, but they're looking very weak into earnings over the next 4, 5, 10 days in the housing sector. But I saw several that made me last night think that maybe the top was fairly close in this sector and got a fairly decent sign of weakness, volume off the top, as we like to say. And 2150 is about where this thing is going to find its first level of support. Polaris, PII Industries, makers of wonderful jet skis, motorcycles, other things, adult toys, had a very good pop up here today to $90.42. Gave it all back. Fairly decent volume, too. This thing has been nothing but a big range going back to November 14th. Waiting for this thing to bust out of this. I don't see anything that says higher or lower, but man, are you stuck in a triangle as we discussed yesterday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. When it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you 2 simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Are we back? Oh, yeah, we are. I actually hit the mute button by accident. We're going to go to Mike from Toronto. How you doing today, Mike?
Hi, thanks for taking my call.
Well, that's what I do.
Okay, let's take a look at Canadian National Railways. Their earnings were released yesterday.
Yep, at 4:15.
That's right. And they had Stifel Nicholas came out with all these bullish upside targets, and I've got other ideas on this stock.
Yep, you've got the signal finally that a top is in this one. You've got your beautiful abandoned baby up there.
Yeah.
that's just sitting out there. You got volume to the downside today. And again, if you would have been wanting to short this stock, this would have been the signal to short it right at the open.
Yeah.
Now you've got a gap down at about $68, and that would be your first target. You also have some decent upside volume. So your trade out here is to that $68 level, unless something massively changes. What's your plan on this? You've been in short this one for a while, right?
Yeah, I've got a nasty drawdown on this.
Okay. Well,
And,
$68, I think, looks probably fairly doable.
Okay.
So-
Is that there's a gap there?
Yeah, there's a gap there, and it is a gap up on kind of nice volume. The next couple of days, the volume was just half that. So, you had 1.2 million shares. That's on the 4th of January where that gapped up. So, a lot of stocks, to me, look like they're going back to some of those gaps up right after the first of the year where everybody shorted the market. In fact, I was working on that last night, and I went and audited all my data for the 5th of January because I thought maybe I'd gotten it wrong back then on how many people were shorting the market. And I tried it 3 different ways, all came up the same. So I'm pretty confident in those numbers. So you had a lot of people come in, beginning of the year, shorted it. It capped up. It just kept moving higher and higher. You finally got the signal out here. I just never had seen one before. I knew that it had light volume, but I'm going to say 80% of these stocks will just hold their own all the way up into earnings until the earnings really show the truth. Like you said, you'll have some kind of jackass analyst telling you it's going to the moon. Yeah. And you see that
81.
There's nobody, not the volume or the interest in buying it.
He said it's going to 81.
What's that?
He said this morning he put a target of $81.
Oh, I think it could get to 81 in maybe a couple of years or something. The question is, when is he going to be right? My guess is that you'll be able to buy it 68 and then maybe go to 80 or 81. Because it's not the end of the world. Everything I see out here kind of shows that we're very close, maybe 3, 4, 5 days into some kind of major pullback in the markets. I don't know how long that pullback will take and how violent it will be, but there are...
You have no downside targets, huh? On the market, 20%?
I will when we start, when we see a few of these things come off, like this one. If I get a few more stocks like this, then I'll have some confidence in giving a number to the downside. But I'm fairly bearish here. I did add 2 positions today in the Path newsletter, so I am kind of leaning that way.
Yeah. Okay, thank you very much.
You bet. Congratulations on going through the tough times. Now the easier times, as the trade comes to you, will be maybe a little easier to stomach. In the meantime, we'll be back. Oh, we're done. See you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.